Hey, welcome to the closing beat, everybody. Happy Monday. How we doing out there? All is good. This October is just blowing by here, really, right? Going by. Are we doing, do they do trick-or-treating? Yeah. Everybody trick-or-treating this year. Okay, good, right? Probably a lot of costumes with masks on. Hey, welcome to our closing beat show. Just a stock market update. We go through all the good, bad, the ugly that's happened for the day. There's a fair amount of ugly going on out there, so we'll see what's going on here as we do it. But we're financial advisors here at Jazz Wealth. We like to help you with your finances. We like to teach different things there. And we've got a lot of good things going on. I want to teach you some new stuff today. And we're starting a little bit early. Keep you on your toes, right? Occasionally we got to change it up so you don't get used to it, get stale, right? You got to be fresh. It's Monday. Let's be fresh. Hey, we're also playing Guess the Dow. Guess the Dow is back. If you want to play, you can go to the website jazzwealth.com/guess the Dow. Tell me where you think the Dow is going to close next week. If you're the closest without going over, we'll send you a $100 gift card. If you happen to be one of our customers here at Jazz, well, we thank you, first of all. But other than that, we're happy to credit your account $100 instead, if you'd like. Our winner last week was not a customer. Joshua Lucky guessed 28597.07. Nice job. Waiting for your address if we haven't got it already so we can send you out that gift card. And thanks for playing. So you can go to jazzwealth.com/guess the Dow if you'd like to take a shot. And, well, if you take a shot, I wish you luck. You know, we'll see what happens there. So let's get started, man. Let's just dive into this thing here and see what we can do for the day. Well, you look off to the right. You're not going to like what you see over there. A bit of a down day. And actually, we kind of just bled lower all day. We were higher after hours all night, Sunday night, kept checking in on it, everything. This morning, everything was good. Markets open, and we just drifted lower little by little. Let's go over and take a look. Here's the S&P 500, pulling back just a little bit today, basically call it 1%. Nancy Pelosi says stimulus needs to be reached by, what was it, tonight? In order to be done before the election. Otherwise, there's not going to be any stimulus there. Did it again, darn it. Why is that a talk? Right? Why are we not just working on stimulus regardless of the election? Come on, guys, put that aside. But it sadly is a focus. And right now, you got Treasury Secretary Steve Mnuchin, Nancy Pelosi talking. But actually, both sides of Congress actually don't really agree on anything. So I maintain those same comments that we're not going to get anything done before the election. I've been saying that for weeks now, and that's what you got. What I found interesting, did you notice where the low in the market was today? Did anybody happen to catch that? If you go back over here, I'm going to zoom in so you can see it. If you go back right here, this is the last time, October 6th, where they said there's not going to be any stimulus. We reject the idea of any deal. And the markets fell to the tune of 60 points. The very next day, they said, well, or that was when Trump said, no deal, stop negotiating everything. The very next day, he said, I'll take an individual deal. If you guys want to put all the crap aside and you want to actually just do one deal at a time, I'll do that. The markets recovered. How much? 60 points by the end of the day. Did anybody catch the low of the day? Today's low was 60 points down there. So we now know that if you haven't seen it, right, you now know, and you can confirm to yourself, the markets have priced in effectively 60 points for a deal before the election, and there you have it. So the 60 points came out because we all know now there is like a 1% chance that any deal gets done before the election there. All right, moving over to the charts here. Let's do some good stuff. I'll start with the NASDAQ here today. It was the biggest loser on the day, but yet it's the biggest gainer on the year, so it's okay. It's still up over 30% year to date. It was a consistent lower bleed all day long. If you look at a 5-minute chart, here's where the market's open, and just all day long, bled lower, bled lower, bled lower. This is where the S&P hit 60 points, and we started to bounce at least a little bit into the close, but pullback day nonetheless. We go over to the S&P 500. It did notice, or you guys did now notice, it fell 60 points on the day, stopped right at 3 p.m. for the day. That's where it hit the low there. Over 90% of the S&P 500 was lower today. Nearly a third of the S&P lost 2% or more. It was big tech, you know, your FANG names. I think Netflix was the exception, but you had Facebook lower on the day. Netflix held in there, basically closed flat on the day. Alphabet was lower. They've got more concerns just besides the market. But think about what happens here. If you own something like Amazon that's been one of the good performers, What's easier, sell a winner or sell a loser? Think about it. If you have a portfolio that's made up of, 80% winners and then some stragglers in there, if the markets start to pull back, you're very likely going to protect your profits before you worry about the losses. It's human instinct, it's emotion. It's not the right thing to do, but that's what happens. And that's probably why you saw a lot of these stocks pull back today. In fact, a lot of the outperformers were the ones that pulled back the most today. So that's what you got going on there. If we go over to the Russell 2000, pulling back a little bit, but this one held up the best out of all the major indices today, partly because of biotech. I'm going to point something out here. Not to brag, but something I need to point out to customers. Biospecifics, it's a small cap biotech stock that we own. Thankfully, we own it. It's up 45% today, and it's probably going to stay right there. They're getting bought out. So if you happen to notice a massive gainer in your small cap growth fund, that's it. It's BSTC is a ticker symbol, Biospecifics. I forget who they're getting bought out by. Is it Enphase? What was the alert there? Endo's buying them out, and that stock was even higher, 13% on the day. So that was part of the reason for the Russell being higher. Obviously, congrats if you own it with us here, but the Russell itself held up really nicely. You had smaller weighted industries like the airlines, entertainment, beverages, all those little tiny areas, they held up nicely today, which helped the index hold up as well. The Russell's got about 2% more to go until it hits positive year to date, so it was almost there before, and that's what you have as of now. I'm going to look at bonds, and I'm actually point out the TLT. Bonds is flirting with the 200-day moving average. It has not been below the 200-day moving average in 412 days. That is officially the longest record on record. Bonds have not been able to hold above the 200-day. Statistically, if you move below the 200-day, it spells quite a bearish move for bonds, which means interest rates higher, and the S&P actually moves lower there in the short term. So something to consider. I point it out now because I'm likely going to keep focusing on it, give you the data and stats and everything on that. If you like data, stats, teachings, quick thoughts and things. Got a lot of great videos this week. The first one that came out today was the fact that you might want to pay more in 401k fees if you can justify it. I went through an example of one of our customers to kind of show where the best growth potential came in paying a little bit more in 401k fees, obviously offsetted by the growth and everything. But that's something to check out because a lot of people just shoot for the lowest fees, and that's not always the best case if you want the most amount of growth. On Wednesday, we're going to do withdrawal strategies. Are you about retired or retired currently and you're pulling money out of your accounts? There's actually a way to go about it. Everyone's a little bit individual and unique, but there's a way to go about it. So I'm going to highlight that, and I'm going to show our Louis Armstrong template there in Nest Egg to kind of show withdrawal strategies, how it equates to more money in the long run by just simply pulling out from different accounts. So we got to treat that as a return as well. And then on Friday, we're going to do the top 4 concerns of our customers here that we've learned over the years. I'll go over some of the details about what we have here at Jazz, number of customers, the assets that we manage and everything, and kind of explain some of the things that I've learned from them. So I hope you'll check that out. Last week for Wine and Wealth is a class we do for customers. We did a portfolio update to go over our portfolios, show the performance there, so be sure to check that out. This week, we're going to do something called balancing out your Nest Egg investments. Not the software that we use, but your entire net worth. Like, how do you balance out the investments across all these accounts? How do you make sense of it? So I'm going to go ahead and model a few examples for you there. Also, our research site, jazzwealth.com/research. If you're interested in it, you can't be a customer. It's $13 a month. We've got a packed schedule for research and data this week, and it's likely going to stay that way. Let's go to the sector breakdown here and talk about what we have. It's not pretty out there. You see all the red on your screen. 10 of 11 of the sectors today fell 1% or more. Yeah, energy fell 2%. It was just over 2%, and well, they all fell on the day. It wasn't a good day if you're looking at the markets there. Communication services, one of the weaker areas in the space there. We talked about that, kind of being Facebook and Alphabet overall. I want to point out Viacom. Viacom looking a little bit weak in the short term, 3%. Anytime I look at Viacom, I go over to Fox. They had a weak day as well, down 3%. Viacom's down 32% year to date. Fox down 26%. That weakness in this area of the sector continues to be a little bit weak. Tech stocks pulling back today. Don't need to tell you that. Microsoft was one of the biggest drags overall. Apple was the second biggest drag on the tech sector at the moment. Tech's still up. If you're looking at the sector, it's up 30% year to date, and it gained over 10% just in the last month. So from this low, really basically to where we are today, that's over 10%. So it's kind of a fast move for tech. It's understandable if it pulls back a little bit. All right, moving on over to utilities. They're holding up kind of nicely. There was a little bit of weakness today. It blasted off out of this range about 10%. We were walking you through it there. In the last month, we had that gain there. So a pullback here is no big deal. I found it interesting that it held its own today. utilities hanging in there just a little bit, and we'll see what happens. So that was an interesting one. Healthcare pulling back just a little bit. It was one of the weaker areas today. There's a lot of good going on in healthcare. I don't always like to look at something and just agree with what you see. Like you see it's down, and most people will go look at the weak stocks. It's the 5th best performing sector for the year, and I'll point out until just the end of the day, Pfizer was hanging in there, continuing with its Friday's momentum there. Medtronic, if you take a look at that, we happen to own this one. This one's waking up here, looking a little bit stronger, continuing that momentum. It did fade away at the end of the day. That's okay. But other than that, you got some good stuff happening in here in terms of some of these stocks in the healthcare sector. That may be one that you go through and do a little research if you're interested in looking through there. Other than that, you got a lot of choppy sectors. Financials just chopping around back and forth, likely due to earnings there. You got REITs. Remember, a lot of these sectors have earnings coming up. REITs chopping around in this big range for just the last couple of months there. You got consumer staples starting to maybe consolidate near the highs there. It's early to say that. Basic materials, you could see it, just chopping around here. No real progress just yet, but one of the stronger areas, so we don't want to give up on it. And in industrials, which has been one of the stronger areas, just pulling back today. I don't think there's anything to worry about there. But you got to notice that you have a lot of sectors in a chop zone, meaning you're just going like this. Why? And so ask yourself, is something wrong? Is it going to pull back? Is it going to continue higher? It's likely due to earnings. We have earnings season officially underway, and we have a whole bunch of earnings this week, and then it gets to be more and more over the next 2 weeks. It's going to be really, really busy, so keep an eye on that. Oh, hey, one more. It's not really a sector, but you see the JETS ETF. That one actually put up a gain today. This is going to be your airlines ETF there. The TSA, remember I shared this with you a while back. We were talking about the TSA throughput, something I like to keep an eye on here. Number of passengers going through TSA checkpoints on a daily basis. It was trending higher, but looking kind of flat there. But ultimately, we were saying, look, it's trending higher. We're recovering slowly. Well, Sunday, which is yesterday, they officially broke over 1 million passengers in one day. So on Sunday, over 1 million passengers in the U.S. traveled through TSA. If you compare that to last year, it was 2.6 last year. So we're still way lower, but that's good news overall for the airlines in general. And so the JETS ETF, along with the airlines, were positive on the day. All right, let's go to some new highs and new lows for the day. 24 new highs, 1 new low. Looking pretty good there. The one new low, by the way, was Gilead Sciences. This is a third worst performing biotech as compared to its competitors. Bristol Myers is the other one. We could get rid of that. And Biogen is the other one. BIIB is a ticker symbol. Other than that, Gilead Sciences ranks in third place. They hit new 52-week lows today. It's basically just fallen apart since all that excitement around the virus. That's this right in here, that they were going to be the ones with the vaccine, and yay, everything's going to be good. Well, that fell apart. Autodesk hit new 52-week highs today. However, look what happened. You got a decent reversal there. So it's a little extended. It tried to get more extended today and then reversed there. You'd expect that pressure to continue on the downside over the next couple days. Zebra would be the same thing. Not quite as extended, but left you with a topping tail today. That tends to produce more selling over the next couple of days, especially if the markets are weak. And maybe, just maybe, we found a top in Paycom. We happen to own it. We're excited. Obviously, it's been a great mover for us, a great position. But I've been waiting for it to pull back. I don't mind if it pulls back. I'm welcoming a pullback, and maybe today be the day. You got to give it a point. Relative strength today. It did hold up. It did post a positive day on a pretty negative day for the market. But other than that, maybe it's ready to pull back. And FedEx, same thing there. Very tight, consistent uptrend. This is the last stock that you want to bet on a pullback, but today's topping tail maybe helps you kind of see that there's a temporary top coming in place there. I don't know. We'll see what happens. But let's move on over to our watch list for the day. You guys ready? That's not a watch list. Those are countries. What's going on there? Here is what we're looking at today. Should you go invest outside the United States? Ooh, is that bad words? Right? Is that unpatriotic? What are we doing there? A lot of people are looking at other countries, not because they want to invest elsewhere for the time being or through the elections, but because there's a lot of discounts out there and there's a lot of good things going on. So what I thought I'd do is go through some of the top other countries you can invest in and the ETFs that you can use to follow them. So I put a list up here. You can take a look at that for a second. I will come back to it, but I'm going to go in order here and start with China. China is the best performing country outside here. They're obviously doing the best there. The A shares, or Asher, is the ticker symbol. It's one of the more popular ETFs to use. Think of it as I did this the other day. Think of it as like the S&P 300, right? It's made up of 300 large cap stocks inside of there that trade on Shanghai and the Shenzhen exchange. Overall, it's very tech heavy, more tech heavy than the NASDAQ. So keep that in mind. You are playing with the tech there. That is the best performer when we go back to that slide to show you in a second. Brazil, popular ETF is EWZ. Had a decent day today. It's the worst performer year to date, as I'll share with you in a second. The EWZ is made up of large and mid cap stocks that are traded only in Brazil. Heavy in banking, heavy in materials and energy. For example, you could look at something like Vale. They had a rough go of it last couple of years. They've been trying. We happen to own Petrobras. We call it just Petrobras just to be simple. And it's, obviously it's a weak area, energy in general, weak area pretty much around the world. And so those are going to be your laggards there. So if you're looking at something like Brazil, notice that it's being dragged down a little bit. It's being weighted down. That's going to be mostly because of energy and some materials if you happen to want to do a little bit more research. All right, if we look over here, we're going to move on to Australia. EWA is the most popular ETF for that one. It is the second best performer through the month of October. Let's just go over here. Here's EWA. Looking over the last month, this is what I'm showing you here. Got 1 month right down the center there. You got the last week's performance and year to date. Cody put this together for me with yesterday's data, so it doesn't include today. But second best performer over the last month there. It's also big on banking and healthcare, banking in general, but healthcare is what's helped this one out. Healthcare has been strong in general in Australia, and so obviously that's helping. It's also been strong here in the States, if you want to take a look at that as well. All right, EWG. Do you want to take a look at that? Because you can probably guess what it is. Germany down here. EWG. We're taking a look at that. This is made up of large and mid-cap stocks that trade on the Frankfurt exchange there. It's one of the only other ETFs or countries that's positive for the year. Notice most of these are trading at a pretty severe discount over there. Now, the German ETF is made up mostly of tech. Right? There's almost no energy exposure in this one as well. I think it's like 0.01%. It was something really shocking there. So they don't really participate in energy there. And also what I thought was interesting when I was looking this up, normally they put about 80% of their money to work and 20% of their money in safety. They're currently using 99% of their money. So if we go over to EWG, you see the performance, you can kind of understand why they're not lagging behind. They're basically all in this ETF. All right, if you're looking over to India, this one was popular back during the trade deal because India actually was a benefactor, was one of the primary benefactors of the Chinese trade deal because a lot of people were moving over to Thailand and India. So we take a look at this. It is the only other country that is positive year to date there because the China trade deal certainly helped it back earlier before and all that good stuff. It's a modified cap weighted index, which you're familiar with if you trade some of our index funds here in the States there. Heavy in tech, heavy in banks, so that's been helpful a little bit lately. One of our ADRs here, INFI. So this actually trades in the U.S. exchange as well. This is currently their largest position. Makes up 10% of the India PIN ETF there, and it's up over 50% year to date. And Reliance, I believe, is the largest company in India. Don't hold me to that, but that's also a large position. That's up 45% year to date. So if you look at something like the India ETF, not too bad. Over the last month's doing pretty good. Year to date, I mean, it's not amazing, but it's positive, right? Can't say that about all the other ones as well. EWJ is Japan there. This one's the most volatile out of them, believe it or not. You would think it'd be China, but at the moment it happens to be Japan. So EWJ is that one. And EWU, which you could probably guess, is the UK. It's the most expensive ETF out of the grouping here if you're going to have to trade that. You also have Brexit and all that good stuff going on, so you expect volatility there. These are made up of the large and mid-cap stocks on the London Stock Exchange as well, and kind of beaten down for the year if you want to go over and take a look at it. Just gives you a different way of looking at things, right? We don't always go over all these ETFs, but maybe this gives you something extra to look at. Worst case scenario, you got a new watch list. Maybe something you can watch if there's ever some news. China, Italy, Japan, something comes up. They got a new prime minister, by the way. Maybe you could actually find a way to participate, and you don't have to do a lot of research. It's just something that's prepared for you and ready to go. I hope that helps. Something different today to get the week started. All right, moving on to stocks in the news. Just got a couple for you here today. ConocoPhillips. Last week we covered this, that they were potentially buying out Concho Resources. Well, that officially came true today. So they announced, yep, that rumor is true. They are officially buying them out, and so that is the news. It's an all-stock deal. I didn't catch the number on that one, but that's the reason those are moving today. CVS in the news there. They're going to hire 15,000 workers for Q4. They work you now. Who works at CVS? Someone tell me. If you work at CVS, you're working. I know you people work hard, especially the pharmacists there, and I don't mean that as a joke. eBay down just a little bit on the day. We look at Barron's over the weekend. Barron's had an article that said eBay is an overlooked stock. They think there's a lot of positive stuff coming forward for eBay. It says it's an attractive stock that everybody's overlooking, so I thought I'd put that on the list there. I already talked about Biospecifics. This is the one that we own in our small cap position. It's getting bought out, and so that's pretty much it. It's going to just stay right there. It's not $88.50 is the price, so don't expect much movement there. It's just what we have. Tesla, no longer. Oh, the stock was down a little bit today, but it wasn't really affecting the stock earlier today. News came out they're going to cancel their 7-day return policy for Teslas there, so it's kind of normal. No big deal. Down 2% on the day, and those are stocks in the news. If you have questions, feel free to ask those questions. I'm going to go ahead and cover a few more things, let the stream catch up, and then I will try to answer your questions as we go here. There we go. Earnings. Are you ready for this? You got Lockheed Martin, Packer, Transportation Company, Procter & Gamble, Philip Morris, Cigarette Company, Travelers Insurance, Interactive Brokers, iRobot, Netflix tomorrow will be the attention grabber, as well as Snapchat, or Snap Inc. if you want to be particular. There are 3 Fed members speaking tomorrow. I don't know why yet, but they're out there in droves. Like I've been saying the last couple days, you had 5 of them talking, 5 of them talking, 3 of them talking Friday, 3 of them talking tomorrow, 3 of them talking today, sorry, and 3 tomorrow. There's something going on there. They want to get out there and talk a lot more than usual. That's above average. You got Lowe's paying out 60 cents and Zotis paying out 20 cents. And today's the day, by the way. Go on over here. We happen to own the stock, so we're hopefully going to be excited by this. Keurig Dr. Pepper getting added to the NASDAQ 100. Update your list there because there you go. They're officially in the mix, so pretty cool there. All right, let's see if you have any questions. I'll do my best and try to do what I can do and go from there. People still use eBay. I know. I go through these modes where, like, when I don't have anything to do, I'm like, let me go to eBay, you know, and then I lose interest. It's too much work to get something done on eBay. I don't know, but I know a lot of people use it for sure. Yeah. If the U.S. market starts slumping, what international markets could be affected the most and the least? You would figure your top gainers, your China, your India. You want to look at those, right? Because like I said before, same with your growth stocks here. Those are the easiest to sell. You would expect those to maybe take a little bit of the pressure as well. And probably Brazil, because they're on the low end there. Yeah. Oh, yeah. Hey, why are we already halfway through the show before 5 o'clock, man? Well, I like that you know the segments of the show, but we're just trying to throw you off today, man. We had a little rain coming. I didn't know if it was going to be loud, so I just thought I'd start a little bit early. I don't like when we do all this work to put a show together and then it rains and you can't hear me. It's just frustrating. You do have the ability to rewind in real time, by the way. I saw that. That's pretty cool. Yep. Turnaround Tuesday. There you go. Yep. Actually, I put it in the notes from Jazz. Can I share it with you real quick? Just because I'm really excited about this. If you might not know this, if you're one of our customers here, I'm going to probably mess this up. I'm sorry. Nope, I'm not going to mess it up. Check it out. I'll pop this up here. This is our Notes from Jazz page. I send an email out to all research members and all customers every Saturday. And I actually type it out. This is not an automated thing or anything. And I put in here a fun fact for some of you. A couple fun facts, actually. But over 2/3 of the NASDAQ's gains this year have come on Mondays. Did you know that? If you add up all the days, the performance and everything, 2/3 of the entire plus 30% gain for the year has come on Mondays. If you only invested on Mondays and Mondays only, you'd be up 20%. Not that anybody would do that, but that, just shows kind of the weird geeky stuff I like to look at. Also in the email, we included the average gain per day. We talked about this week being one of the more quiet to weak weeks. All kinds of great stuff in there. I don't know. I sort of went overboard today. But if you're just joining us on a research site and you want to look back, now you have the ability to go back to previous posts here. It's just going to start archiving since the first time we got this set up. So really cool sort of thing there if you want to check that out. But yeah, that's it. I just, that's all. I don't know how I started down that tangent there. Yeah. I love it. I snuck one by you guys today. I love it. Yeah, I don't. There's not. I think we all sort of realize that today. There's not going to be any stimulus before the election, right? I think there will be a stimulus plan, but it's not going to be before the election. The next question is before the inauguration. I don't think that happens either, which is sort of sad, especially if things stay kind of bad. But we'll see. I love it. I love it. You got a little cash for tomorrow. That's cool too. Yep. We'll see what happens. Of course, we'll be here tomorrow. Regular time, 5 p.m., but just thought I'd try to start a little bit early today. I had a lot of time this weekend to get some work done. So in the meantime, I appreciate you guys joining us. I hope you learned something today, a little different look through our watch list. Enjoy the rest of your day, and maybe hit the subscribe button, thumbs up button. If I get too many thumbs downs, maybe it's because I started early, but you forgive me, right? See you later.